this financial statement, because it should always be consistent, transparent, and one can compare like uh, with the organization, like comparable manner, in the sense whether the company is going under profits or losses, everyone can come to know easily. And this is a standard process every company will follow in order to present their financial statement. Am I clear? Can you just give me a thumbs up or something like that, or can you please unmute and talk? Like if people are okay with this, I can just, because I need to come to other screen while I am sharing the screen. I'm not able to see the responses from you guys. You can just unmute and say that if it's okay for you to continue. Is this
Yes,
okay?
ma'am. It's
Yeah,
okay.
yeah, sure. Yes, ma'am.
Yes, yes.
Please do talk, guys, because I'm not able to see your reactions. I just need to come to other screen. So this is a standard principle, like this is every companies follow in order to present their data in a comparable and consistent manner. And this is so transparent because they'll come to know whether the company is running under profits or losses, or is formed by framework of accounting standards. And it is a standard setting which is in US, like FASB board. In the sense, full form of this is Financial Accounting Standard Board, which is in the US. Okay, this was implemented, I think, in the US first, basically to ensure the financial reporting is consistent, comparable, and honest across different companies and industries. Okay. Till now, is that fine with you guys?
Yes, fine, Riju.
Yes, ma'am.
This is a financial accounting standard board which is in US. This board is which was like uh, firstly bought this concept, accounting principle concept, GAAP, generally accepted accounting principle concept, in order to know the consistency of financial report, and we can compare across different companies. So this was brought into picture. Okay. I am giving you with example a scenario where ABC Corporation made a sales worth of $10,000 in December 2024, but they're receiving payment in Jan 2025. There is a scenario where they had made a sales worth of $10,000 in 2024, but they are receiving the payment in 2025, which is in January. So under this principle, how does this work? Means the revenue should be recorded only in December 2024 when the sale was made. When they are selling this product of $10,000 in December 2024, they are supposed to record the transaction which was made in December 2024 and not in 2025. When the payment, they are receiving the payment in
Ma'am,
Jan
your voice is
2025,
breaking.
though they are receiving the
Ma'am,
payment in
sorry
Jan
for the
2025, they
disturbance.
are supposed to record the transaction when it was
Ma'am,
made. That is,
your voice is breaking short.
Left actually due to some network issue.
guys, am I clear? Am I audible?
Still your voice is breaking, ma'am. I don't know, like some network issue. Sorry for that. Still, your voice is breaking, and you're sharing the screen, I feel. No, we are not able to hear anything from your end. No, ma'am, not yet.
Hello.
Yes, ma'am.
Yeah, madam.
Am I audible now?
Yeah.
Yes,
Ma'am.
ma'am.
Oh, sorry, there was a little technical glitch from my end. Like
That's
internet
fine, ma'am.
is not
Yes.
working.
Yeah,
No
I'm
yeah.
just
issues.
changing my place. So where I was, like, I was just sharing you.
Example, ma'am. You were giving example. I'm reading that one actually.
Yes. So this is a scenario under GAAP, which falls under this accounting principle. So, for example, there is a scenario where this corporation, ABC Corporation, is earning and making a net worth of $10,000 in the year 2024, but they are receiving the payment in Jan 2025. But according to this principle, what they are supposed to record the transaction is the revenue whichever they are earning in December 2024, that should be recorded in the same period instead of recording the what payment in Jan 2025 when the payment was received. You guys got this point?
Recording the transactions on that particular period, right, ma'am?
Yes,
Not
yes,
postponing and yeah,
yes,
fine. Done.
yes.
And the
So
GAP shows the financial report of the organization.
yes, yes. So any
Thank you, ma'am.
organization in any particular period, if they are making a transaction, they are supposed to record those transaction in the same period of time instead of postponing the transaction. Okay. For example, here is a scenario, right? December 2024, they are making a sales. So they are supposed to record the transaction in the same month, not in Jan 2025. Whether they are receiving the payment in Jan 2025, they are supposed to record the transaction which was made in December 2024 is what this principle says. You guys got this point?
Yes, ma'am.
Am I good to go?
Yes,
Okay. So why this GAAP is requires, why it is requiring means it requires for revenue recognition when it is earned, not when cash is received. This ensures that financial statements accurately reflect the company's performance in the correct period of time. So this ensures like a transparent, complete details of company's performance. Financial data would be transparent. So this GAAP is used. Okay. We will come to know the company's performance by using this principle. Is that good to go? Any doubts?
Clear, ma'am.
Okay. So what does this
yes,
GAAP ensuring is? It is ensuring consistency, reliability, and transparency in financial reporting. Okay. So it provides a transparency where when the financial reporting is made. So, and it also helps the stakeholders, means like investors, regulators, whomsoever lending the money, understand the understand and compare the financial statements. So when they are preparing financial statement, right? So when the sale is made, when they are earning, when the revenue is showed, it is like complete picture, right? They're like it's not hidden or something. So it will help everyone like investors or the company people or everyone to what get the data in detail. Okay. And what is does is, if anyone, like it's any organization failing to follow this GAAP, it can lead to misleading of reports and legal consequences too, because misleading reports is like sale is made but they are not recording the transaction, but when they are receiving it in the period next month or after 2 months later they are recording the transaction, but when the sale was made that transaction is not recorded. So there is a, discrepancy of what recording the data, right? So this helps us to analyze and record complete transparent transaction. Am I clear? Guys, is that good to go?
Yes,
Yes,
ma'am.
ma'am.
Okay. So GAAP full form,
yes, ma'am.
you can just write it down now, and you can just write down this verse which are in bold. From here to here, you can just write it down. and then I'll be just sharing you the detail if you want. You just write the full form of this, and you just write this. It is followed accounting rules, it follows standards and procedures. Till here you can just write. I'll be sharing this with you all. Once done, let me know. I will go to the next concept.
Done from my end, ma'am.
Okay. Anyone else pending still? Can I go to next concept?
Yeah.
Okay.
Done, ma'am.
Everyone? Okay. You understood this, right? GAAP completely? In simple terms, we should record the transaction in the same period when the sales are made, not in the period when we are receiving the payment for those transactions. It enhances transparency and consistency, and helps us to compare the financial data within the organization. So GAAP is used. So when next comes accounting cycle. What is accounting cycle means? It's a step-by-step process of recording, processing, and reporting companies' financial transactions for a particular accounting period, and it also ensures that financial data whatsoever is prepared is accurate and it follows accounting standards. Okay.
Yes, ma'am.
Am I fast or something?
No, it's correct. Okay.
Okay. So accounting cycle means it records, process, and reports financial transaction. So what's the steps? Here are the steps of accounting cycle. Identify transactions, like record each and every financial event. Each and every financial event means sales, purchases, expenses, income, whatsoever financial transaction is taking place or financial event is going to happen. So we need to identify those transaction. And second, in accounting cycle, what we do is record in general entries. Like we need to enter double entry accounting. You need right, debit and credit, two entries will always be there in journal, right? So we need to follow those steps, debit and credit each and every transaction. And then what we are doing is, after transferring the data to journal entries, we are moving it to the general ledger, which are categorized them by account. Categorizing by account in the sense personal account, or it's that real or nominal account. So it is divided into in ledger, it is divided, accounts are divided. Okay. And then comes trial balance. We should summarize all the ledger balance to check if debit is equal to credit. For example, we are purchasing a furniture is coming in, debit, cash is going out, so credit. Equally it is entered or not, like debit and credit entry is made or not accurately. That details which we are preparing in trial balance. And then we are making adjusting entries. adjust for accrued and deferred items. For example, if any unpaid salaries are there, depreciation of any products, goods are there, so those entries we are adjusting in accounting cycle. And then prepare adjusted trial balance as well is the sixth step. Then ensure accounts are updated after adjustments. So once we are adjusting, right, for example, we are adjusting the unpaid salary or depreciation, we are rechecking in the accounting transaction whether it is updated or no. And last step is prepare financial statement. So yesterday I had taught this what and all we are doing in financial statement. Like we have this income statement, balance sheet, cash flow statement. Cash flow statement is nothing but how much cash is coming in, how much cash is going out, and everything. Statement of equity, and everything is recorded in financial statements. And we are closing the books. For example, transfer temporary account balance, example revenue expenses to retained earnings. These are revenue and expenses are always temporary account balances. So we are closing the books by using this. Okay. And then last comes the post closing trial balance. So final check to ensure debit is equal to credit after closing entries. After closing all the entries, all the transaction for each and every transaction, not only we are purchasing furniture to an organization, there are many things, right? We are selling the product, we are purchasing the product, we are paying to laborers, we are investing, capital is there, many things are there. Each and every transaction is divided according to its accounting, what they say, accounting terms. For example, account types of accounts, so personal, real, or nominal might be. After all these, entering the transaction where debit is equal to credit, then we are closing the trial balance entry. Am I clear till now, till here? Any doubt?
Clear.
Guys, any doubt till here?
No doubt, ma'am. It's clear.
So you can note down these headings, this flow chart of accounting cycle. You can note down this till ninth point, and then let me know. I'll continue this with example, how this works. Done?
Last one, ma'am.
Okay. No doubts, right, till here?
I understood, ma'am.
Everyone, anybody else, like everyone are clear? Can you please respond?
Yes, ma'am.
So,
Done, ma'am.
okay.
Ma'am.
So I'm giving here an example. So there is a scenario where a business named SYZ Services started operations in January. So what were the transactions that took place in January? So owner invested 1 lakh in cash. Then he bought office supplies for 10,000 through cash, and he provided services worth rupees 30,000. So what he did, 20,000 is received by cash and 10,000 he is giving a credit. Means they can pay later. So fourth, what he did, like paid salaries of 5,000 rupees. So what we are doing here, we are entering the journal entries. First, cash is invested, right, of 1 lakh. Owner is investing cash. So cash is debited to capital account 1 lakh, that is credited. Then what transaction he is making at the date of Jan 5th? He is making office supply. He is bringing it for 10,000 rupees cash. So office supplies account is debited to cash account. And then what he did, he provided services worth rupees 30,000, but he received 20,000 in cash, 10,000 on credit. So cash is debited here, 20,000. Accounts receivable, means he's receiving 10,000, right? So 10,000 to service revenue account is 30,000. Total of 30,000 is credited to his account. And then at last he's paying salary of 5,000. So salary is an expense, debit to cash account 5,000. These are the journal entries. These are the example. This is an example for this accounting cycle. Am I clear? Am I clear till here? So that we
Okay,
can
ma'am.
go.
Yes.
So next concept is bookkeeping. So this is the last concept which I'm teaching now, because these are all similar. So there shouldn't be confusion for you guys. So after this, I would share this complete notes with you all. Okay. So what is bookkeeping is same. It's like recording all the financial transactions of a business in systematic and chronological manner. It's like bookkeeping is actually a foundation of any accounting by capturing each and every transaction, daily transaction. For example, sales, purchase, receipts, payments, each and everything. This is a basic thing, basic, like it's like a pillar for accounting. Okay, bookkeeping, that they record each and every transaction, financial transaction of a business. Key features of bookkeeping is what? It records financial data accurately and regularly on a regular basis, and correctly and accurately the data is recorded. It includes cash, credit, income, expense, assets, liabilities, everything. Each and every transaction, each and every financial activity is recorded in bookkeeping, and it is usually handled by a bookkeeper, nothing but an accountant. It is handled by an accountant. It helps in preparing trial balance, and later one can use this to prepare financial statement like monthly, quarterly, or yearly. One is using to showcase like whether the company is under profits or loss by help of bookkeeping. By using daily transactions, when it is recorded, we can get to know the end result of this. And types of bookkeeping, there are two types of bookkeeping: single entry system and double entry system. Single entry system, usually it's done by small businesses where only one side of the transactions is recorded, but they're not recording a complete transaction. But in double entry, each and every transaction which affects both the sides are recorded. One is debit and the credit. That is like assets is equal to liabilities plus equity. So here also I had provided an example for a double entry system where we are recording debit and credit. For example, ABC traders transaction. In this transaction one, owner is investing 50,000 in the business in cash. So what happens here, the transaction, cash is debited to capital account, because capital, when it is invested, it is nothing but capital. So that is credited. So 50,000. Transaction scenario 2, what bought furniture worth rupees 10,000 in cash. So furniture account is debited to 10,000, to cash account 10,000. And sold goods worth rupees 5,000. So what the transaction might be, cash account is getting debited to sales account 5,000 and paid rent 2,000. So rent is an expense. Rent expenses account is debited to cash account. So this is a small scenario with example. This is it for the day. Any doubt till now? Any questions so far, yesterday's or including today's? Any doubts you can think and please ask me. Hello.
No doubts, ma'am. It's clear.
Apart from, is this examples everything making sense to you all? Like I'm taking a simple example, basic example, so that it would be easier for you all to understand. So is this making sense or no? Can everyone answer? Hello.
Guys, please reply no.
Yeah, it's clear.
Yeah, ma'am, it is cleared.
Okay. Any doubt so far, like yesterday's session, today's session, any doubt?
No, ma'am.
Okay.
Mm.
Okay. So can you please go through this like yesterday's session and today's session as well? Because it helps you to strengthen your foundation because these are the basics. Please go through all this. I'll be sharing this. You have this recorded version also, and you also have the notes. I'll be sharing with it with you all shortly. Please go through all this and prepare. Okay. So my Monday, what I do is till date by tomorrow also I would be giving you a session, right? So 3 days classes whatsoever I'm doing. So Monday I would be asking you questions. So you should be able to answer. Is that fine with you all? Just go
Yeah,
through
ma'am.
week. Yeah, go
Sure.
through this notes and everything in weekend. If you're any doubt, anything you're stuck with, you can please come back to me on Monday and ask before uh, starting new session on Monday. I would like to revise whatsoever happened in the last 3 days of the class. It should be helpful to you is what my motive is all about. It shouldn't be like I'm just doing and you people are not. Uh, yeah, sure. I will just share these notes with you guys. Uh, yes, please go through all this, okay? Any doubt so far? You can think. I'll give you 2 minutes of time before winding up. And also here, no, many thing accounting terms you feel like repetitive because see, even bookkeeping is repetitive. Double entry system is like they are all nothing but we are just recording the transaction, uh, like in a standard process to know the financial end statements. So you may find repetitive, but please don't be confused. Everything is similar, but the terms which are used are little different. That's it. Bookkeeping means it includes both single transaction, single entry system, double entry system. So accounting cycle involves all the steps, means from identifying the transaction to closing the transaction, everything where debit is equaling credit, everything we are seeing. Those are like accounting cycle. GAAP is used. It's a standard this where it helps to what where the data is transparent, clear, and we can compare the data. So GAAP is used
Ma'am,
in the
bookkeeping
current.
in one word, like day-to-day transactions recording, right, ma'am?
Yes. Day to day, each and every transaction, financial event, whichever takes place in the business, we are recording it. That is like a main pillar.
Done, ma'am.
Yeah. And GAAP, you can just think about GAAP where and when. If we are doing anything in current period, the same is recorded in the current period itself, not in the upcoming period, where if we are receiving the payment whatsoever in next month, we are not seeing those. We are just looking at the current transaction. That is GAAP. Everyone good to go? Can we wind up?
Yes, we can.
Sir, can we wind up this session?
Ma'am. Thanks.
I'll be sharing the notes with you all. Okay, guys.
Yeah.
Bye. Please be prepared for tomorrow. If anything is there, let me know. Okay. Even in WhatsApp group, you can just ping me if you guys have any doubt. Thank you all. Bye. Take care.
Yeah. Bye.
Thank you, ma'am. Bye.
Thank you, ma'am. Bye.
Good night. Bye.
Thank you, ma'am.